Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoy the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview with one of my favorite stories and underappreciated stories, I believe. DUOT Tech, ticker symbol DUOT on the NASDAQ. Chuck Ferry is the CEO, and the CEO that came in as the turnaround CEO that I met, I don't know, probably, how long ago did I meet you, Chuck? Maybe year ago.
A year ago, and then we saw you in person out in Las Vegas, and that was a good trip out there.
Yeah. So I mean, you've and I say this all the time. Anybody that follows me knows that I think you can have a great product, you can have a great service, but it really comes down to leadership. And from the first time I met you, I just felt like this is a guy that's a leader. It's no nonsense guy. He's going to get things done. And I look at the progress you've made. You just reported a nice quarter with some pretty significant growth, right? Have some challenges with supply chain and inflation and all of that, but for the most part, I believe on track. Yeah.
Yeah, absolutely. So, what we've been trying to do is put together a string of quarters where we successfully meet our financial targets, and do that for two reasons. One, obviously, we want to make the business profitable on a go-forward basis, but also two, we want to be able to demonstrate to our investors that that we have the discipline to follow a plan and meet those targets and goals. So this will be the third quarter in a row that we've actually slightly exceeded our financial targets. And as you kind of start looking at our financials, you'll start seeing some positive trends, as you kind of go across the different financial metrics. Again, still not where we really want to be, which is break even or better, but we're definitely headed that direction right now, and can start to see the pathway for that.
Okay. So I listened to the call, and then I had to listen to the call again because I wasn't listening to the call very closely the first time.
Clear next time.
And then it started to really bother me because I heard the word cars, and then I went, for some reason that translated into autos, and then the more I thought about it, that didn't make any sense at all. So then I had to go back and listen to the call again. And this time I paid full attention, and there was a portion in the call that was very interesting to me. It wasn't cars as in automobiles. It was with these trains that you have these portals for, where you're capturing images at 70 miles an hour plus, and it looks like a still photo where you can actually read the part number off of a part. It was the fact that the cars themselves on the train are often owned by somebody else. They're not owned by the train company, right?
That's right. Yep.
And there is a potential opportunity there for the amount of data that you're collecting, because you had 1.5 million cars inspected, I believe.
Yeah. So our, kind of improved teams here, we've been able to do a much better, if you will, analysis of our data. Over the past 90 days plus, we've imaged in excess of 1.5 million individual rail cars. Of that, we have detected thousands of detections that need to be addressed. But the interesting statistic for us, and one that I think bears further attention, is that probably 10% or less of those rail cars are actually owned by the Class 1s. And even fewer of them are actually owned by the Class 1 that owns and operates that rail inspection portal. And so what that kind of told us very quickly, after further looking at it, is that the rail car owners themselves are the ones that actually own the assets and ultimately bear the cost of maintenance, as well as any, if you will, insurance concerns and safety concerns, obviously in tandem with the Class 1s that move them on the rail. But what this does now is we are able to detect where we probably have in excess of well over 300 rail car owning companies that we have scanned with our current fleet that's deployed. And so we are currently in discussions right now with at least 4 to 6 of those car owning companies, some of which are very, very large, and spend millions and millions of dollars on maintenance, where they're pretty interested in in the data that we have and what it could do to help optimize their maintenance operations, as well as what they call their utilization rate. And so what that would do, we feel that we could offer that in a subscription type model. And what that will allow now potentially hundreds of car owners to subscribe to our data. It would be a much lower price point on a recurring basis. Ultimately, that would allow us to add more customers, diversify the number of customers, as well as grow not only the top line revenue, but really the mix of that, where more of our revenue would be recurring and more predictable. So that is something that we're working on very, very hard right now. And I think in the next a month or so, we'll have a much better line of sight on how we can deliver that and monetize that.
And what's really amazing about it is when you and I first talked, and I mean, I did think that the software, the whole system was pretty incredible, but we talked about that recurring revenue model, right? That was one of because it happens to be my favorite business model, because it's very predictable, typically very high margin. And that is something that I'm watching that, develop right before my eyes, right? So that's a very exciting thing to think about. And I guess what's even more exciting is, yes, you are focused on the railroads right now, but we've talked in the past that this isn't just about the railroads. This is, I mean, you can use this for trucking companies, you can use this for airlines, you could use this for a lot of different use cases. Right now, you're deep in the weeds on the railroads, but as all of this starts to prove out, right, you can apply this model to other industries.
Absolutely. And we are currently operating in the trucking and intermodal space with one major customer. We have a small select couple of folks here that are looking to refresh and update that technology, while at the same time we're kind of taking a step back and just kind of I would say assessing the trucking intermodal industry. Again, there are strong industry indicators, as well as individual conversations that we're having. They need something similar and want something similar to the rail inspection portal. Similarly, we're doing a similar exercise inside the aircraft industry. One of the interesting things that we've learned in the aircraft industry is that actually in both the trucking and aircraft industry, as the world transitions to 5G and the current 3G becomes no longer supportable, that is causing a lot of I'll say the technology that tracks and moves safety type data. It's going to require a refresh of technology. So we think that may be an opportunity for us to kind of get in there with that technology refresh. Inside those two industries, the rail has a similar challenge as well. But that kind of makes a little, inflection point right now in the next, let's say year or two or three, with the onset of 5G. to do certain things as a part of those technology refreshes as they relate back to safety and maintenance and optimizing these fleets.
So you just had me on something and I want to highlight it, and now I'm having a little, well, we'll just move forward. It'll come back to me.
Yeah.
So right now I read that you've got your biggest department in the organization is your AI department, right?
Yeah, when you take our software and AI, because they really go hand in glove. Yeah, it's our largest department right now. We have stacked up some serious talent inside those two departments, and not to forget, we've also done the same thing in our IT and hardware. But what's kind of cool about our software and AI department, not only can they really start to see this data and start to do some really cool things with it, but they have also recently, a lot of the additional work that we've driven with our current customers has been additional software work, as well as especially the delivery of AI algorithms, or what we call AI use cases. So we're up to 20 delivered use cases now. By the end of October, we'll have a catalog of 28. Those all have the capability to not just be delivered to the current 2 customers that we're in contract for, but so of our other customers that we've got in our portfolio have now asked for artificial intelligence. The good news for us now is that we're feeling a lot more confident about delivering it quickly, but also artificial intelligence that's highly accurate, inside this industry, which they've been talking about AI for a long time, but it hasn't really been as reliable in the past as folks would probably like it to be. And I think we're changing that dynamic now.
I know what I was going to ask. So the 1.5 million, it's not like you've got 100 portals out there. How many portals do you have currently? That 1.5 million came from how many portals that are active?
Yeah, to be specific, it really came out of about 8 or 9 of them. We have 11 out in the field, but that data came from about 8 or 9 of them. And to be honest, the number is, as we keep kind of going through the data, we're getting more accurate with it. And we're actually finding that, we've basically taken millions of images, 1.5 million plus rail cars themselves. And what's kind of cool is because of the way our system is set up, we are able to sort through the AEI tag readers that's on each car exactly who the owner is, along with the date, time, and place, and some of the other characteristics of those cars. So it's really a pretty cool thing for the industry in general, where we're able to capture all of this data that's valuable, obviously from a safety standpoint to the class ones, also from a safety standpoint, I think, to the car owners themselves, as well as anybody else that's operating around these rail networks.
So you're talking about 8 portals. What's the potential addressable market for just in terms of portals?
Well, we've talked before that, if you covered the entire network, and we've done some studies and they're still accurate. If every class 1 wanted to put us out and cover their entire network, we're talking around 150 portals. This introduces an idea where you could actually have fewer portals, but actually have more customers that could benefit from that safety data. That would provide probably a more viable or a healthier, business model on a go-forward basis. So I think we're always going to want to be in the business of putting out more rail car inspection portals. I think what we've done now is we're trying to think about how can we best get full utilization out of our rail car inspection portals to benefit the industry and the safety that they seek.
And I think what's important to note is that, and that could be a concern. I mean, I was going through the 10K earlier, and you do have you've got four major customers right now, right? And that could be scary for somebody that's looking at it, because one customer walks away, that's a big hit to the company, right?
It is, yeah. So we still have concentration risk, and we take that head on in those filings, and we've talked about them on our earnings calls. So we've got, I would say, four major customers, but we do have, we don't talk about them as much. We do have some, I'll say, smaller customers, but again, they're smaller. So if one of them were to to offtake, if you will, the impact isn't nearly as much as those four major customers. And so in our board discussions and inside the management team, what we really want to do now that we got our feet up underneath us and a little bit of wind in the sail, so to speak, is to diversify that customer base, really across the class ones, in further into the transit rail, and then obviously eventually get across one or two other sectors or industries to diversify that portfolio.
Okay. All right. So I know that we still, the DUOT has still got a very, very small share count outstanding, right? I mean, it's a very small share count. However, with growth comes, I mean, you're going to burn cash when you're growing, right? And you are in the growing phase, and now you're looking at this whole other segment. So how do you feel the company is positioned? I know that it's, basically you've got enough cash to last 12 months, right?
That's right.
You've got with this latest quarter, because of the supply constraints, because of inflation, you're having, higher costs. So that to get you to profitability and self-sustainability maybe pushes this out. These current challenges push it out a little bit, right? But in order for you to attack this thing that you want to attack, this new potential opportunity, you feel as though I would say you're probably going to have to go back to the capital markets, right? Or that's a possibility, but I don't necessarily view that as a bad thing. I view that as this is an opportunity. I mean, it may not be the most ideal timing in the market just because of what's happening out there, but I think you're pretty cognizant of what a good deal is and what a crappy deal is, right?
Obviously, the market conditions themselves are tough in terms of raising capital. However, I think the way that we should look at it, as you look at our company right now, is so we have a relatively small amount of shares that are out on the street. Our cap table is relatively simple, and as we approach November, we do have some warrants that are going to expire. So we endeavor to make our cap table even simpler than it is now. We're a thinly traded stock, and what that means is we have a good, I'd say, group and a very supportive group of long-term shareholders who over the years have continued to invest in us. Myself, along with our board of directors, and even some of the employees in the company, are actually buying our own stock when we have the opportunity, because it's traded so thinly. Believe it or not, when I want to go out and buy my own stock, when I get in the window, sometimes I have to wait a few days to actually get my hands on it, which is interesting. So that being said, we are dealing with, like everybody, a difficult supply chain challenge. It's not going away, at least in the near term. So we just have to learn to live with it and then take steps to mitigate that. So I think we've already been doing it a little bit, but I think going forward, we're going to look to probably further invest in buying inventory of selected long lead items. For us, that means computer servers and cameras, and a couple of other items. Obviously, that takes capital, but what that does for us, it allows us to take advantage of new work that we're getting, and shorten the time that we can begin to recognize revenue with that, which is important, not just for to get new customers, because part of being able to sell stuff means you can actually get it within a reasonable period of time. So I think that's an important point. Secondarily, if we, and I think we will, We're going to push real hard on this subscription model, we'll call it, wherein we will probably find key locations in the United States where we'll invest our own dollars to own and operate a rail inspection portal in certain locations, and use that to sell sell subscriptions. Obviously, that's an investment and will require capital. So we're going to keep, and we talked about it at our quarterly earnings call, that the optionality to go out and raise additional capital. But I think now it's for good reasons, not maybe previously where we were trying to survive. We're going to maintain that open possibility to do that. Obviously, we hope the market will ultimately reward us for that. And longer term, near term, yeah, kind of tough, but we'll see how it goes.
Well, listen, I mean, so what do we have for growth? We had, I want to say it was 400 and something% over the same quarter previous year, right? I mean, it was.
Yeah, it was over four. Yeah, it was over. I think it was like 450% plus year-over-year growth from the last, from the previous last measured quarter. And then I think if you look at our financials kind of on a quarterly basis, if you stack them all up, you're seeing positive, financial trends where things are going in the right direction. At the same time, like you'll see our operating costs, or our G&A, has held steady or actually declined a little bit. You'll see that our R&D spend has nothing crazy, but it's kind of trending upwards a little bit because we are spending money on R&D now. We've kind of re-engaged with that. And then the profitability, although it is still, which kills me, still negative. It's less negative, and we're gonna get that fixed because it's killing me.
I know it is, but you know what? Look at the history of this company. Look at the chart going back to, I mean, how old is the company again? I mean, the company's been around for a long time and they never made money.
It's been public about 2015, and then prior to that was private. So yeah.
Right. So I mean, you've only been on the job for what, a little over a year, maybe? I mean,
yeah, just I believe it or not, I'm getting close to 2 years now.
Oh, 2 years. Okay. All right. So 2 years. Give yourself a break, man. I mean,
I'll be able to find anybody else here pretty soon. So
you're getting close. You're really, really, really close. And the bottom line is, and I think you and I talked about this before, you didn't take this job to make this a good mid-sized company. You took this job because you see real potential for this to be a serious player at some point.
Yeah, I mean, we've talked before. I'm now a serial, become a serial turnaround person. This is about the third or fourth time I've done it. Certainly, I've done it with many of the military units I commanded, because just the way it is. And my previous company, APR Energy, it was a much larger company, but it was going under. We were able to turn that successfully around, add several $1 million worth of revenue, and take a very large debt facility from about $550 million down to 300, successfully transact. So this company has good potential. It's got a really good team behind it right now, that I know. I'm really pleased to be able to work with, and the technology. People want the technology. So as long as we stick to it and stay disciplined, I think the outcome will be very positive for us.
Yeah. And with that small, I mean, look, even if you, with the capital raise, I think, how many shares outstanding do you guys have right now? It's fully diluted.
Yeah, fully diluted. We're a little over $8 million.
8 million shares. 8 million shares.
8 million shares. Sorry.
Yeah.
Yeah. So that's fully diluted. I think at least 1 million of that is in we'll call it stock options and things of that nature. That's in a pool for employees and things like that. And then we've got I want to say it's like 1.5 million in warrants, which we think we're going to clean up here in
November.
November timeframe. So it's not really that much. I look at other companies of similar size, and I can see they have much larger market caps because they've issued out a heck of a lot more equity. We want to be careful about that because we don't want to. We want to be respectful and careful with our current shareholders. We don't want to do anything to hurt them. But at the same time, I think we've got their support. As we go forward and do things.
Right. If they understand the vision that they understand growth consumes capital. I mean, that's just the way it is. And now you have a much bigger opportunity, and I mean, a recurring revenue model, subscription model. That's all exciting stuff. I mean, short-term pain for long-term gain is the way I view it. Right. So, and you still got an uber tiny float. When you say thinly traded, well, yeah, there's only 8 million shares outstanding. So that's a thinly traded stock, but that's also the kind of stock that with one news announcement can have, insane moves, right? Because of the fact that you have such a small float. So, right. I mean, this is not some rinky-dink company. This is real technology that is going to make a difference, save lives potentially. I mean, this is serious stuff in my mind, right?
Yeah, we had I'll just use a vignette here for a moment. So we were we're working with one of our passenger rail companies because we can actually see their rail cars in our Class 1 portals. And so there's good cooperation, amongst these major customers. One of my mechanical carmen detected we were looking at some of their passenger cars, and we noticed on one of their locomotives there was a something that probably needed to be addressed from a safety perspective, and it was such that we made a phone call, and they took care of that. They took that locomotive off the track in about 2 hours. And address the issue, and so that's an example of
that was a courtesy call. That wasn't your client. That was a courtesy call from you because you saw it.
No, that was a courtesy call. It was not something we were contracted for. It was just the right thing to do. I think there's kind of a stated state of play, amongst all the railroaders, along with the FRA, that if you see a safety defect or something like that, you're obligated to report it. And that's what we did in that particular case. So again, to me, it kind of proved like, wow, the technology really can see and detect things, and it can, help make things safer.
That to me, that actually gave me goosebumps. I'm just going to tell you that right now, because
that was on the train. You think the same thing. So
I mean, it really did. It gave me goosebumps because who knows what that phone call. Who knows what the outcome could have been otherwise, right? I mean, that to me is so huge, and it validates what you guys are doing. And I think the opportunity is just massive. I mean, that trying to figure out the scam on this before is tough. It was tough for me to try and put a number on the total addressable market, because it's not just the railways. It is trucking. It is potentially aircraft. I mean, it could potentially be boats. I mean, at some point, I don't know. I mean, there's a lot to take in here, right?
Well, kind of the nirvana of it is it's what we've kind of look. There's black boxes on locomotives. There's black boxes on aircraft, and they even have them in trucks now. But basically, what those black boxes are doing is they're talking to the engine and to the aircraft and to the locomotive, and it's basically telling them how it's performing. Just like you got a more modern car, right? The computer and the display is constantly telling you how the car, is feeling and operating, right? So you take all of that data and you can actually offload that data real time off those platforms while they're moving. Then when you combine it with the visual inspection, now you have an even more complete, picture of what's happening with that particular platform, from which now you can even get a more holistic look at, what's happening with it, how it's performing, and then do predictive maintenance and or intervention with it, to make it safer, and make the owners of those assets, more efficient with it. And again, we're not the only ones doing this, but that we're certainly in that space.
Right. So, I mean, let's since you just brought that up, who do you view as your biggest competitor in this space? Who would you say is your biggest threat?
Well, we've talked about this before. We do compete with a company called Benavision. Benavision was recently divested from Trimble, which is a very large company, and was acquired by Wabtec. So you can very quickly go find Wabtec online, and you'll see they're a very large, sophisticated company. There are some smaller companies out there that we're in the space. We don't necessarily compete with them head to head, but we're kind of in the same space. So you'll see WID, you'll see Mermec, which is based out of Italy but operates in the United States. But to be honest, one of the competitors that we have is the Class 1 railroads themselves. The Class 1 railroads are very large and sophisticated and long established, operating companies, and they have the wherewithal when they decide they want to develop their own technology, and have in the past, and certainly could in the future. And so again, we want to be able to do that for the Class 1s, but obviously in some cases they'll feel that they may be able to do that a little bit better on their own. So I think that's something that we do compete with. And I think for a little while that competition will still be there.
So, I mean, on the technology that you have, I mean, you have proprietary, where it would be difficult for somebody else to reverse engineer it or get around your patents if you have patents. I mean, how are you protected in terms of your system?
We do. So we have 7 or 8 active patents right now, and there are some of them are related to some of the hardware solutions that we have. So, for example, we have a linear speed sensor that has been developed and is patented by our company. Now there are other speed sensors out there. The one that we've developed is able to track train speeds at a very, very, very finite manner, which allows more accurate imagery, which in turn allows more accurate artificial intelligence. We have some other patents that are around software and artificial intelligence. And then we have several patents that are actually pending on some of the newer developments that we put in place. So we fully intend, obviously, to protect our IP. It's not something you can just go in and reverse engineer. It would be very difficult to replicate it pretty quickly, particularly as it relates to the speed sensing and translating the images all the way over into effective artificial intelligence the way we're doing it.
And the longer that you're doing this, because it is AI, it's getting smarter and smarter, so that the gap between whoever's coming behind you, right, it gets wider and wider, I think.
Yeah, I think so. I'm always kind of one where we want to be confident. We don't want to be cocky about our competition. So I have grown up, especially in my military career, we never want to underestimate, who you're going up against. I think this is also one of those cases where, we ask our team, commercially, operationally, and technically, to keep a sharp eye out for what's going on out in the industry, and to make sure that we're not getting caught flat-footed, but also too that we're, that we're taking in, the information that we're seeing out there to make sure we're staying, competitive, and at the front edge of this thing.
All right. So look, Chuck, I mean, I appreciate you taking the time and giving us the update. I know there's going to be more stuff coming. I just think that, I want to do this real quick here. We're going to talk about the chart.
We're going to go to the chart. Yeah.
Yeah, we have to talk about the chart because it's actually kind of interesting. It's actually kind of positive. So
okay, I'll take that.
Yeah. So there is a if you look at this longer term trend line, and actually I'm going to move let me move the logo for a second here, just so we can get a really clear picture. Let me take that off. All right. So if we look at this kind of long-term trend line, and I'm going back to when you had the spike in 2021, right?
Yep.
Had a big pop, got up to about looks like $14 or so, $13.50, somewhere in that area. And really from that point, it's been from the upper left to the lower right, right? But what's really interesting is that you've just recently came down, you kind of touched this low that was made in 2020, right? This is actually a weekly time frame. So each candle represents 1 week.
Right.
All right. So back to 2020, you hit this low, and then you hit that low basically in the May, June area, right? Yep. And that is really, and I'm not just seeing this, just so you understand, microcaps have been pounded for 14 months, right? So I'm seeing a lot of what I guess I could classify as, it seems to be like the lows are in, that a lot of companies are now, they've hit their low and they're just maybe consolidating or basing out, which, I call that building a platform from which to launch from. The bigger the platform, the bigger the launch, right? So what I think is interesting though is that you've recently crossed over this downtrend line, right? So you've got a good potential area of support that is activist support that went back to 2020, at least for the time being. I will put a caveat on this, which is I don't feel as though the overall markets are done going down. I think we just had a nice bounce in the markets, but I think that we October or September, August, September, and October typically historically are not good months for the markets. That's just the way it is.
Yeah, we've got some interesting events that are going to happen in those months this year as well.
Yeah. So there's a couple of things that might
Yep.
Make the whole market. And if the whole market is weak, 90% of the stocks will follow what the market is doing. So if you do take out the 350 area, then you got to start looking for another area of support. But for right now, that appears to be an area that's being defended, and you broke this trend line to the upside. So even if you just consolidate and you work your way, look, I think fundamentally you have things lining up, right? You've got a whole new addressable market that you've identified that maybe in the next month or so, we have more clarity on the potential of that, right?
Yeah, that's right. Yep.
And that kind of lines up with the technicals in the stock, which could actually give it a pretty nice lift. So, things are from what I'm seeing, technically and fundamentally could be looking to align, and then you could get a pretty nice move in the stock. So I'm encouraged by what I see from a technical standpoint, and I'm encouraged from what I hear from you fundamentally. So, if the whole market rolls over and really bad things happen between Russia and Ukraine and, Europe and all this stuff, well, then, that's the market. It's not DUOT. You're in good shape. You're not in a position that you were in where you had to raise capital to survive, right?
Yeah, no, it's definitely better than it was a year ago. When you're down here day to day in it, right, you keep kind of beating on yourself. That's what good organizations do. But the fact of the matter is, yes, we're in a much better position than we were. If we were to go raise capital, it's going to be for good reasons, to continue to really, no kidding, grow the business. So we've kind of gotten through the almost 2 years of kind of turning this thing around. The technology's better, we're delivering better. I think we're now commercially starting to realize what our true addressable market is. And as I've been told, just keep focusing on that. Eventually the stock price will come, and we'll go from there.
Perfect. I mean, look, I said it before, this is the way I look at it. Everything is a risk reward. What's my risk? What's my potential risk? What's my potential reward? I think that at these levels, your potential for risk is low, right? I mean, what's your potential reward? I think it's probably just where it sits today, probably a 3-to-1 ratio, right? So that's a ratio that I'll take all day long, right? Potential risk is 1, and I'm looking at a potential 3-bagger. That to me is worth it, right? So I'm not telling anybody to buy the stock, but I am telling you to put the stock on your radar. Keep an eye on DUOT because they're executing. Chuck, you're doing a great job, man. And I'm gonna keep coming back to you every time you have a new development.
All right. Well, it's always a pleasure to talk with you. We'll have to get you to come visit Florida here at some point.
Yeah, I hate leaving Vegas, man. I love Vegas. All right. Yeah. And next new development, we'll have you back and do this again. Okay.
All right, thanks.
All right. Keep executing, man. All right. I'm going to stop this. Hey there, all you stock market junkies. Thanks for tuning in to yet another CEO follow-up interview. Today we had DUOT Technologies CEO Chuck Ferry. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Till next time, stay safe. Alpha Wolf Trading wishes you the very best of success.